Hi everyone. So today let's speak about the difference between index funds and ETFs. So as many of you would be knowing, ETFs are usually like passively managed, right? So I think it's ideally can be compared with index mutual funds. So let's see the main differences. So one main difference with respect to ETF compared to a mutual fund, which is an index mutual fund, is basically the live price availability, right? When you are actually buying the ETF, you since it's traded over the exchange, you can actually see what is the live price and you can buy at that price. But with respect to index mutual fund, that is not possible. You have a cut-off time in a day. Before that, if you pay for the mutual fund, like the end of the day, net asset value will be the price at which you are buying. So you don't have a correct timing control over that price. So, and next is the requirement for demat account, right? So for ETFs, to hold ETF, you actually need a demat account because it's a exchange traded one. But at the same time, with respect to mutual fund, you don't really need a demat account. You can either be it in your directly linked to your PAN, or you can actually buy it in demat form as well. And third is like SIP kind of structure, right? With index funds, you can actually buy in small quantum every month in the form of SIP, but with ETF, that is not possible. So these are the basic differences between ETF and index mutual fund. So whether to invest in an index fund or ETF uh, depends on your investment style and what is the kind of expense ratio. And one more basic stance with ETFs is usually, since it's a passively managed fund, the expense ratio for ETFs are lower than that of index funds generally. So since considering all these things, you need to decide whether you need to invest in a mutual fund, index mutual fund, or ETF. Thank you.